Morning, Fractal Effects team. Before we get started, please make sure you read the disclosure. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. Jump onto the charts in a minute. So today is an interesting day. I'll go over a couple of things. Now, what we have here is probably one of the worst setups. When I say worse, I mean this is, to me at least, and to our strategy, one of those setups which is 50-50. And remember, we don't like to get involved in 50-50, but I want to go over why this is 50-50. So the next iteration of our indicator is going to have these zones painted here, here and here. Now these are what we call DSDs, daily standard deviations. Now, as you recall, with the spotlight indicator, it already shows you the standard deviations of how far we're going to extend. But with the blue zone strategy, there currently are no standard deviations and more or less kind of an extension target. We just aim for liquidity, be it London highs, Asia lows, etc. But this, like I said, this next iteration is going to have these daily standard deviation. When the daily standard deviation, the DSD, is hit on both sides, that's when the juice is considered squeezed. Because right now we had a double break, and we know what a double break means. A double break means that the dealer reveals their hands, or their hand, I should say, and we know exactly which direction the market wants to go. But when you have a double break into one of these zones, and again, it's not a coincidence. These were painted out before 8:30. They were painted out before 8:30 Eastern Standard. So with a double break, usually you want to go up. What do? We wait for the market to retrace back down and then push up. But when we bounce off of the DSDs, and we reject, I should say, then the market has completed its mission. So the fact that we double broke right into this area and wicked, that's not a coincidence. So even though the daily high is right there, previous day's high and previous day's low, the market can actually reverse right here at the DSD. So again, today is one of those days where we have both DSDs are hit. Now we got to wait for a confirmation to let us know exactly which direction this market wants to go. We left this 5M fair value gap, and we closed below the series of 5M candles. Now, if we hadn't got that double break, I would have gladly taken this 5M fair value gap to take out previous day's lows. Remember, Tuesday usually sets the low for the week if we're bullish. The fact that we had a double break right into a DSD, and this is a daily, we're sitting inside of a daily fair value gap, one that's already been utilized. I believe we've already ran this, but we are getting rejection here on the daily time frame. And then we got like another 1 hour fair value gap up there. I just wanted to put in some targets. But I'm going to wait for that confirmation to see exactly which way this market wants to go. This is where the water gets muddy. If it was any other day, I'd avoid this, even though it looks like a beautiful setup. At any point, if your probabilities drop below 70%, it's not worth it. So in about 1 minute, our range will be fully formed, the spotlight range, and then we'll wait for a confirmation retracement extension, that pattern. But as far as the blue zone strategy goes, this is one of, like, this is very rare. Rarely will you see a setup where you have a double break into a DSD. And the next iteration of this, of the blue zone indicator, will have these zones marked out for you. So normally a double break lets us know that the dealer, that's the dealer revealing their hand, letting us know that the market wants to go in that direction. But when you tap a DSD, that's usually a reversal point as well. So the only thing that's going to change this confluence is a spotlight confirmation. So we have to wait for our dealing range to be broken and a confirmation. I do have a slight bias to the downside, just because today's Tuesday, and just because we did have a sell model initially. We had a sell model that broke right into this DSD, purple zone, blue zone, not a coincidence. These are all three different reference points, but the fact that it rejected off of all three, then went up. If we had gotten this retracement before we had hit the DSD high, we'll call this, then I would have waited for a 5M bullish fair value gap and gladly taken this into the DSD. But a lot of our targets have been hit. The only other targets that remain, again, if it's going to be a true Tuesday, then we should be hopefully heading down to take out previous day's lows. Let's see what happens in this fair value gap. I'm going to change the color of this so it's easier to see. I know we got a lot of boxes on top of boxes here, but once you fully understand the strategy, this becomes like second nature. This is the matrix. I don't even see these colors anymore. I just see directions. So we got a blue zone right there. We also got our New York fair value gap is right there in green. It's pretty small today. There it is. I can see it coming all the way up to this white line. Not to mention we're sitting inside of the NWOG, that orange box, that big one. Now, although I'm going to wait for confirmation, we're going to try to read the tape here. Let's go play by play. 1M fair value gap up in here. Blue zone. Let's see if we get a tap and a bearish fair value gap setup. Remember your weekly range. Remember, every day the market has a specific footprint. Open, high, low, close. Remember, it's doing that on the weekly. So that means every day represents something. Open, high, low, close. Usually Tuesday is the low of that weekly candle when you're bullish, and it's the high when you're bearish. So let's see if today is going to be a true Tuesday, because we are bullish from yesterday. Still no bearish fair value gap created. I'd like to see the market at least tap this second box here. Let's change the color of it. If this was a Venn diagram, I'd like to see a tap right there in between this one and this one. And then give us a bearish setup on 1M. That would be ideal. We've also added a few things. We've updated some of the videos on the back end to really tighten up this strategy. I'm going to go over a couple of things if we have an early session today. I'm going to go over a couple of things that I saw yesterday. We weren't live yesterday, but I'm going to just want to cover something as far as divergence. Because remember, when you have a powerful indicator, then it even reveals divergence to you. So yesterday we had a double break on US 500 at a point where we did not have a double break on NAS. So that means that one of the assets had revealed its hand. We can use that against the other one. We'll walk over that setup after today's session. If today offers us anything here, let's see. Now we're bouncing off this blue zone. Still no 1M fair value gap here. We rejected this, and now we're pushing down. 19 seconds left. Let's see if we get another swipe up or if we get an engulfing candle here. Since we have no fair value gap here, we could take another swipe up, tap this. Getting more of a bearish setup now. Our box is red. Remember, stick to the strategy. A lot of people get FOMO here. They see enough red candles and they want to jump in. Stick to the strategy. We're going to wait for a confirmation. For anybody that's still following the blue zone strategy, even that, there is no 1M fair value gap here. Which is usually a good indication. See, it's bouncing off this blue. We got a wick. There's a chance that it could do one last swipe up, take out these highs. Doesn't have to, but that's why you wait for confirmation. That's why you wait for all the points of confluence, regardless of your strategy. If your strategy has 3 points of confluence and you only see 2, wait for that third one. With us, it's hit a fair value gap, create a fair value gap. So we've hit this higher time frame 5M fair value gap here, but we have not created a 1M fair value gap yet. Plus, I don't like these. I don't like a shallow retracement where it doesn't at least hit the consequence encroachment. It usually comes back to dig in even deeper, especially on a day like today. As mentioned before, we have a 50-50 split. That is rare. Rarely will you see a clean rejection of both DSDs, daily standard deviations. That is clean, which muddies the water. And we've broken both sides of the range. So we had a sell model, and then we took out London highs and even yesterday's afternoon highs, the purple zone. There's previous day's high, previous day's low. Those are the only two targets left. Here we go. Now we're back in. I want to see it touch that midpoint right there between this 5M fair value gap and this 1M fair value gap. The other reason we're waiting for the spotlight confirmation is because when you do have a setup like this where you've tapped and rejected both DSDs, then you want to get above or below one of them to let you know exactly which direction this is going. So there's the zone. There's the top of our dealing range. So in order to get a bullish confirmation, we would have to get above the DSD high. And then a retracement probably back to it, and then a push. So now we're digging in deep. So other than our Tuesday footprint, that's the only other directional bias that's kind of helping us out here. NAS on the left, US 500 on the right. Yeah, the confirmation is the only thing that's going to break this 50-50 directional bias that we have right now. We don't, it's playing both sides. If it was any other day, I'd be 100% confident that we're going to go up. The fact that it's Tuesday, the fact that we've already hit the DST high, that means the juice might be squeezed already to the upside. Oh, there you go. Let's see if this actually sticks and creates a 1M fair value gap though. Wait. 20 seconds left in this 1M candle. Now, if we don't create a 5M fair value gap, what did we do? We wicked out this liquidity under the blue zone. This is where people went long. So it took out those orders. Now, usually you have a sweep when we want to go up. It's bounced off the blue zone as well. Still no 5M fair value gap. I mean, no, sorry, 1M fair value gap created. Yeah, that closed it out. And the fact that this is all happening right at the blue zone, not a coincidence. Today's blue zone overlaps with our NYC fair value gap as well, making it an even higher point of confluence. Now, it's technically rejecting off the bottom of it, the midpoint to the bottom. But again, no 1M fair value gaps have been created yet. So the daily standard deviation points for the blue zone, these boxes, it's actually a very, very difficult mathematical equation to figure those out. With the spotlight, it wasn't. The spotlight standard deviations are actually just based off the range. But the blue zone standard deviations are not based off the range. That's why we're still working to create these in the next iteration of the indicator. We're trying our hardest to get it done as quickly as possible. But as mentioned before, there's a lot of variables that go into these two. Still no 1M fair value gap created. 23 seconds left in the 5M candle. See what's happening on the 15. Most of it rejecting to the upside still. About 4 minutes left. Fresh candle roughly. I'd like to see this candle close below the blue zone if we're going to head down. Even though we have London's fair value gap here, I'm not going to put too much emphasis on it. I'm going to trust our blue zones. They're much stronger. But as mentioned before, we have no 1M fair value gap created here yet. Today's homework in the Learning Hub, make sure you understand what fair value areas are. Not fair value gaps, fair value areas. Because the market does retrace back to the fair value areas and those fair value gaps inside the fair value areas specifically to balance out the price, or balance out the range, I should say. So in order for fair value to be delivered, those ranges have to be balanced out. You want a well-balanced price range. Still a whole bunch of nothing here. But there's the blue zone. So it's using the blue zone and the NYC fair value gap. Let's see if it is truly going to reject off of it and head down. So ideally, if we take out this wick low, we create that bearish 1M fair value gap, this thing could be pushing down. So tomorrow, Fed Chair Powell speaks. We have core retail, retail sales. That news is dropping tomorrow. It's another reason they usually hold up the market when there's no big news on the Monday and Tuesday going into a Wednesday news day. You'll see Monday and Tuesday potentially, not always, potentially set up a daily fair value gap or possibly a 7-hour fair value gap. And then it likes to go and tap it when Fed Chair Powell speaks. So Monday and Tuesday are just kind of consolidation days and or utilized just to form those gaps. Remember, time in the market is better than timing the market. The more you understand the ebbs and flows and the way the market breathes, the more comfortable you are with certain moves. Right now we are still rejecting off the consequence encroachment of the blue zone and the NYC fair value gap to the downside, but the market is yet to actually start pushing. A lot of wicks this way, which indicates the market wants to go up. Still waiting for a confirmation. About 4 minutes away from 11. If we get a bullish confirmation, that'll put us over the DSD. If we get a bearish confirmation, then we'll most likely do a run for these lows. Regardless of direction, should be getting ready to pop soon. Rarely will you see it hold up for this long, especially at this very important zone. Just going to go up to the 5M here for a second. Little sliver of a fair value gap in there. That's what it used to push up. "56 seconds left in this candle. I'm going to 11 o'clock. Still more than enough time to get that confirmation. Let's just see which direction we're going to go, though. Waiting for that confirmation also frees you of all this headache. Look at this back and forth. So we've been consolidating roughly for the last hour. The second both of these were hit, I knew we were going to have a lot of this back and forth. Definitely not one of the best days to be trading. Anytime Fed Chair Powell speaks, usually you can get away with a Monday and a Tuesday because he usually speaks on a Wednesday, but doesn't mean it's going to come easily. A lot of muddied price action like this. And it's using that, excuse me, is using the blue zone and the NYC fair value gap to muddy the waters even more. Just keeps rejecting off of it. Maybe you'll shoot up over it, but for the time being, it's just creating or engineering more liquidity. People going short there, people going long here. One minute 39 seconds left in this 5M candle. So going into the NYC Open, we had an upside expansion model. With a mixed model sell, double break, DST. So enough confluence on both sides, to be completely honest. That's why it becomes this 50-50. And the confirmation is the only thing that can actually break that 50-50 confluence. And it has to do it within that matter of time. So again, makes for a very just unfavorable trading conditions. Best to just avoid. I would have switched over to oil if we had enough time, but it looks like we might be able to, or might be getting a move here. So we closed above the New York fair value gap, above the blue zone. Let's see if it's the same over here. Might be rejecting off of it this way. back right into the same zone. Looks like it wants to create that 1M fair value gap now. We got 35 seconds left. Let's see if it leaves this open. So until that confirmation comes in, I do still have a slight bias to the downside, just because of the daily footprint, because of those DSTs. 5 seconds, 3, 2. So we've left this fair value gap. Now let's see if it taps it. Keep in mind, that's the first 1M bearish fair value gap that's even been created after this consolidation phase. So we did tap it, we did close here. Let's see if this thing wants to start pushing down now. As mentioned before, until I get confirmation, I personally am not interested. This is a high resistance liquidity run. Remember, a high resistance liquidity is anytime you have this many barriers. It's got to get past this blue zone, this purple zone, this blue zone, this purple zone. It's got to get below the DSD all the way to the previous day low. Like, that's a big high resistance liquidity run to get to the downside. Technically less liquid or less resistance this way. Just got to get past the DSD. So we're green across. Now, if this thing does drop from here, just like plummet from here, which I kind of hope it does, just so I could show you guys that sometimes when everything looks bullish, you have to wait for the rest of your confirmation. Like we're green across the board here. It's bouncing off the blue zone and the NYC fair value gap kind of to the upside. Again, all these wicks are this way. But until we get that confirmation, nothing is certain. We've tapped. We've squeezed the juice to both sides already. But let's see. About 17 minutes left to see if we get this confirmation. Just gonna go back up to the 5-minute here for a second. So we've already had an early retracement to our EMAs. That means when we do get that confirmation, this thing will move quick. So we've closed well above this, violated this. Oops. About 15 minutes left. Let's see if we get this confirmation. We're still inside this 5M fair value gap. This one right here. Still respecting it. Can get rid of this one for a second. Still pushing up. About 12 minutes left. Once again, trying to break out of that 5M fair value gap, out of that NYC fair value gap. There's the blue zone under us. Look at all this back and forth consolidation. Like, this is ugly. That's why it's sometimes best to just wait for a confirmation. If you have other things to do, just literally once you've set up the chart, your phone will give you an alert once we have a confirmation. Looks like we're heading up. There's a chance we could bounce off the wick. This is a pretty big 5M wick. So we could bounce off the consequence encroachment of that wick as well. Just want to keep an eye on it. Let's see if bounce off that, or if we get confirmation. It'd have to get over that in order to give us our confirmation. You know, the best part is once you get the hang of this and you get familiar to just pattern recognition, immediately you can take a look at the charts and realize, hey, I'm not going to sit through this, or I don't want to trade this market. As soon as I saw that it hit these two, I knew that I'd have to, at the very least, wait for confirmation. So it hit here at 9:50 Eastern Standard. And depending on what your schedule looks like for the day, you can decide if you want to wait or if you want to, again, just walk away. Still inside that 5M fair value gap. 8 minutes left to go. Still stuck inside that 5M fair value gap. Still a whole bunch of nothing. 6 minutes left. Let's see if we get that confirmation. And push past one of these zones. These weeks where Fed Chair Powell speaks, excuse me, are better to just avoid. We take a look on Mondays and Tuesdays and see if there's a good setup, but immediately when you see this kind of price action, you know it's going to take its time. And you have to decide, do you want to waste your time? Do you want to sit there patiently watching paint dry? It's something you got to decide. So again, we've pushed down, back to the 20 EMA. We've already done an early retracement at least, regardless of which direction we're going. As soon as we get that confirmation, it's going to move pretty fast. Because it's Tuesday, my bias is still slightly to the downside. Two minutes, 50 seconds left. There's a chance we might not break the range at all before our time is up. 1 minute, 17 seconds left. If we just close, this candle closes bearish, we'll most likely call the session there, but I do want to go over one thing really quickly. Two, one. Okay, so we're going to conclude our session there. We did not get a confirmation in that allotted period of time. I still have a slight bias to the downside. So I just want to go over yesterday's trade really quickly. Let's get some clean charts here just so it's easier to see. So let's go back to yesterday. We had a pretty big gap yesterday. That's what that big purple zone is. Sorry, just 1 second. My apologies, as mentioned before, the charts start moving slowly as soon as we go live. Just working on that still. Okay. So here's yesterday's setup. These things just stop moving here for a second. Okay. I'm try not to move it too much. Sorry. I think it just keeps creating a lag. Okay. So yesterday we had a manipulation move to the downside first. And then the second candle did not break the previous candle's high. So we didn't have a double break. But here we can see that divergence on US 500. We did have a double break. The next 5M candle came back up after the manipulation range was broken. It took its highs and it broke its low. That's the dealer showing us their hand. Now we don't just jump in, but we now know that we're only looking for a sell. So what's the first 5M fair value gap that's created? Well, we retraced back into the New York fair value gap. A lot of back and forth. Went even higher, took out those highs. And then the first 5M fair value gap that was created was right there. Now, as soon as we got below the blue zone and we rejected the blue zone, you can always use the blue zone as an kind of the equivalent to a fair value gap. we're rejecting off of a blue zone and you already have a bias, dealers already revealed their hands, you could have taken this sell right here all the way into the purple zone. Same thing here. So even though we didn't get that double break, and keep in mind that double break didn't come till much, much later. But since these two markets are supposed to be working in tandem, we knew that we were looking for a 5M bearish fair value gap. And that was the first one created. We went below the blue zone. There's a dark blue zone in there. So you had a London fair value gap and a blue zone right there. We tapped it, took out the lows right into the purple zone, which was the big gap left from the night before. So that's how you use divergence with this strategy. If you get a break on one asset, then expect the other one to break as well in that same direction. If you get a double break in one direction, expect a potential double break on the other, and or use that with the rest of your confluence to figure out your